And Weiss, you are back to being more bearish. Why?
I am, and the backdrop is I was always bearish,
sure you were.
But I saw some trading opportunities. And the reason is that inflation is stubbornly high. So you can cherry pick, where inflation is maybe moderating. But I guarantee if I ask Jim what the price of the Birkenstocks he's buying or the Aperol spritzers are, he's going to say they're still going up. And they are. So what you see are critical elements of inflation holding very firm. And of course they're going down. Of course it's peaked. But the question is, what's the rate of decline to get to the Fed target? Number one. Number two, the economic data is very good. So you're seeing some parts of it atrophy, but overall, yes, the consumer's been resistant in certain areas. The economy's been a little resistant. Can't argue that. But you don't want it to be, resistant to the decline. You want it to go down so the Fed can say we're done. So the point is the Fed is far from done at this point, and we have not yet really felt the impact of Fed tightening.
What's interesting is you and Jim, since you brought him up, you see things somewhat the same way. It's just you come to different conclusions. It's like, yes, you admit the economy's strong. The conclusion you come to is that's a negative because it's going to embolden the Fed to do more. Jim says, no, the economy's good. It doesn't matter, A, what the Fed does, because the economy is going to withstand whatever they do. And they may not have to do as much because inflation's coming down more than meets the eye. Have I summed this up correctly to set up a broader debate?
Very well. And there's a lot in that, obviously. I will start by saying, what should be patently obvious. If the Fed peaks out, Scott, at 6% on the Fed funds rate, this market is not priced for that. So I will admit that. Let me start there. I think we can agree on that. But the market is priced for 2 to 3 more 25 basis point hikes. And that is likely to happen if inflation comes down along the trend lines that we saw before the January figures that came out last week. Now, let me point this out. The 3 months of data prior to last week's inflation data all came in better than expected. So what we have to do individually and as a team here is decide, was last week's inflation data the start of a trend going in the wrong direction, which is what I think Steve is referring to with Birkenstocks, or is it an aberrational blip in the otherwise downward trend? You know where I come out, but I'll state it for the record. I think it's an aberrational blip. That is last week's higher than expected inflation reports in a downward trend that will take the need out of the Fed to do more than 2 to 3 25 basis point hikes. And to summarize, if that's the case, this market is priced to go higher. I'll say one other thing. Technically, and we can do this now, we can do it later whenever you want, Scott. Technically, there's a lot of things that who don't pay attention to a lot of technicals, do look at and say, this is important enough, this is obvious enough from a technical point of view that the market should be going higher.
Liz, there are some who say if the market's priced anything, it's overpriced. Just given what I said, nobody can answer the question, regardless of whether you're a bull or a bear, as to what the ultimate toll on the economy is going to be from what the Fed does and what it still may do, right? If you agree with the bullards of the world who say, okay, 5.375, 3 more 25 basis point hikes, we still don't know what the ultimate impact is going to be on the economy. Given where we are and what we know now, is the economy, is the stock market too expensive here or not?
Yes. I think it's too expensive here. Now, look, I own 3 pairs of Birkenstocks, but I'm with Steve on the bearishness.
You drink Aperol spritzes, so.
Occasionally. They're not my favorite. I'd prefer something else. But anyway, so I think the equity market is too expensive here. The Fed funds futures market has priced in 2 to 3 more hikes. Absolutely, right? And the bond market, I think, has arrived at that end point as well. The equity market, however, has not. And I think that we're still looking down the barrel of a gun that has not come to grips with what the consumer may or may not have strength for the rest of the year and what earnings are going to do for the rest of the year. And I think the equity market is being overly optimistic. I wouldn't pay for it broadly at these levels. That doesn't mean that there aren't spaces that you can kind of hide out in and wait this out. But I think we're in an in the meantime market until there's a catalyst to the up or downside. My bet is downside.
See, Bill, all roads, no matter what sort of road you take, they all lead to the same place. What's going to happen with the economy? Is the stock market too expensive where it is now? It all leads back to the same thing, the bond market and the stock market. The bond market has moved. The Fed funds futures market has moved in line with the bullards and the Fed. And is the stock market offsides with all of that? Every debate we have leads back to the same question. How do you answer it?
Yeah, it's a great debate. And I think what we're seeing right now is the economy that we expected in the first quarter. A strong consumer, a little better growth. But I do agree with Weiss that the Fed may have to come in here and sort of raise rates more than the market is anticipating. So I think that's going to slow things down. We've gotten the stronger consumer. We've gotten the stronger growth. So in the next few months, I mean, I think we could see things start to slow down a little bit. From a multiple standpoint, though, I don't think the market has a multiple problem. I think it's more of a sort of an Amazon problem. I mean, if you have a multiple of 18, let's say, forward earnings on the S&P, you remove Amazon and replace it with Apple, it drops about a point and a quarter, a point and a half or so. So that brings things down. I think, and that leads me back. My road is to this market is a stock picker's market, and it's a market of haves and have-nots. What companies have brought down those earnings expectations already in 2022, and what companies haven't? And those are the companies that you want to own.